Yeah, good morning, everyone. Though Friday we saw US market correcting again with perspective of Russia and Ukraine concern continuing, and also the increasing inflation, and with that various Fed president of different region giving a negative comment. So that was keeping the market low. But today morning there are some positive news which has turned US future positive in today's morning trade. That is that Joe Biden and Putin has agreed to again negotiate and talk over Ukraine dispute. So that has bring in some positive news in today's trade, which can have a positive impact on other market as well. Even if you see Asian market has started bouncing back in the morning, and are reaching some market near to positive territory as well. And even the oil, which was at around $95 plus, has come down to $93. So all around some positive impact can also have some positive impact on Indian market as well. So outlook seems comparatively positive in today's trade. Apart from that, aluminum is down by around 0.5%. Copper is flat. Iron ore is up by around 1.5%, and steel is up by around 0.5%. Now I'll request technical team to take up from here.
Yes, thank you. So, good morning, all of you. This is Swati. Today, the market is likely to open on a flattish note or slightly on the negative notes. Whereas on the downside, 17,200 technically will act as a strong support level. If it's break that level, then only we can witness more sell-off into the Nifty, which might take a Nifty towards 17,100 levels on downside. Now, as I said, 17,200 will act as a immediate strong support levels. We likely to witness some sort of a bounce back rally which might take a Nifty towards 17,340 to 400 levels. The overall view will remain a cautious only, but the pullback rally small pullback rallies can be seen during this leg. The view will remain cautious as long as Nifty trades below 17,500 levels. Once it manages to give a breakout and consolidate on a positive basis, then only we can see some fresh buying into the Nifty. As of now, will remain into the range bound trading session only 17,500 to 17,200 levels. Coming towards the Bank Nifty is well placed above the 50 DMA, which is gives some sort of a relief sign. For the today intraday purpose, 37,700 will be the will act as a immediate resistance level. Any move about that level, we expect a pullback rally to be continued towards 100 DMA, which comes to at around 38,000 levels. Whereas on the downside, 37,300 and 37,000 will act as a supports levels on the Bank Nifty. Coming towards the Nifty Finance, that is at 17,300 will be the first resistance level. Above that level, 17,400 levels can be seen. On the flip side, 17,100 will be the first intraday support level for the Nifty Finance. Below that level, 17,000 levels can be seen. Coming towards the stock specific, Pidilite really looks good at the current level. Also, the stock is as of now trading about 2440 levels. We believe if the pullback rally is likely to be continued, 2500 levels can be seen onto the Pidilite. Stop loss can be kept at 2410. We are looking for a target of 2500. I think that's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, overall, as we've been saying, Nifty is range bound and very likely to remain range bound for the next few days as well. Whole of this expiry, you have seen trading in between 17,000, 17,500 with a 100 point up down move on one particular day. Overall, the view remains the same. We believe this range bound trade is likely to continue. And, if the data changes or, there is some drastic change in the data, only then particularly you will see, a big fall or a big rise in Nifty. At this point of time, I don't see much going forward. Also, this is the rollover week. So you will see rollovers starting to happen. So it is going to be very interesting to see how the rollovers pan out. There are both shorts and longs into the system, and next couple of days will be very interesting going forward. But more or less, the view will remain the same. That 17,600 on the upside is a resistance, 17,000 or 16,900 on the downside is a support area. From the stock specific front, looking at the PSUs, all the PSUs have done pretty well, and especially Coal India yesterday, sorry, on Friday, have added a good amount of open interest built up after a long time. Also, SBI Life, IEX, these stocks have done pretty well. So, focus should be on PSUs now going forward. They will perform pretty well going forward. As a whole, this index is low on open interest. Not many people are holding it, and so very likely, these stocks will again start to fire on the upside. IT sector as a whole, we believe, it has seen a lot of shorts and will continue to see some selling pressure going forward. So look to make short positions in large cap IT names like Infosys, Tech Mahindra, TCS. So these three stocks, at least for this week as well, we believe some selling can come in. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. People were expecting the merger of JMC projects and Kalpataru Power Transmission to happen, and so that is progressing. The companies have announced that every shareholder of JMC holding 4 shares in JMC would get 1 share of Kalpataru Power Transmission, and JMC would get merged into Kalpataru. At the current market price, there is a 5% arbitrage in favor of JMC. However, the merger date is exactly 1 year away from today, so the waiting time is high. Post merger, the order book mix will be 30% in buildings and factories, 30% water, transmission and distribution 24%, and balance in railways and oil and gas. The rationale for merger is that the combined entity will be the largest listed EPC company with order book of 37,000 crores, and the company will be able to position itself for larger projects in the pre-qualification rounds. And also there is expected to be some cost synergies of around 100 odd crores. However, in the longer term, we are not seeing any growth from the company's T&D division. So that is why we are overall neutral on the company. Equitas Small Finance Bank has completed the QIP and has raised 550 crores. The purpose of the QIP was to reduce the promoter shareholding to below 75% within 3 years of listing. So accordingly, the promoter stake will come down from 81% to 74.7%. The QIP price is the same as what the current market price is at 53 rupees. This values the bank at 1.7 times TTM price to book. And this will increase the book value per share from 31 to 33 rupees and reduce ROE by around 1.5% from 12 to 10.5%. Government of Singapore is the largest investor in this QIP with around 155 crores, and remaining money around 400 odd crores is coming from a bunch of mutual funds, Nippon Life, SBI, ICICI Pru, HDFC. We have a neutral call on the company because as we saw in the results, the collection efficiency for microfinance and small business loans has reduced from 101% in October month to 95% in December month, and we expect this figure to further decline in the month of January because COVID-3 peaked in the month of Jan. Accordingly, even the restructured book has increased quarter on quarter from 7.4 to 9%, which seems to be a very high number. So that is why we are neutral on Equitas Small Finance Bank from the near-term perspective. Lastly, we hosted Shriram Transport Finance as part of our annual investor conference, and Company says that they expect the merger between themselves and Shriram City Union to be completed by November of this year. Expect the combined entity to report loan growth of 15% in FY23. And credit cost for current quarter, that is quarter 4, is expected to be at 2%. This will be the lowest level of credit cost since the time COVID has begun. So if this comes in, then market will take this positively. Also, Shriram Transport's asset quality has remained better than all other vehicle financing peers since COVID began. Third wave impact has been lesser than expected, and there is hardly any impact on disbursements as well as collections. So we remain positive on the company. Thank you.
Good morning, everyone. HGS UK arm has backed a contract worth rupees 2100 crore to provide critical support to UK citizens for an initial period of 2 years. This is positive to the company. Thank you.
Yeah, apart from this, one another news is that the Rakesh Gangwal of Indigo, co-promoter of the company, will be resigning from the board and will also be reducing its holding over a period of time. The other promoter, that is Bhatia, who is currently running the show, will continue as a sole promoter thereafter. The key thing is that the dispute which was there between two promoters will now get subside, and the decisions for the growth of the company can be taken by a single person. And apart from that, the decline in holding will be over a period of long period, and what we see that there will be a good buyer coming in the company if suppose there is a large chunk which is on sale. So overall, we take that as positive, as overall outlook on the direction of the Indigo is comparatively positive. Only hurdle is of high oil prices, which is having some impact on the performance of the company near term. But overall, if we see the increase in occupancy and increase in utilization of the fleet is increasing gradually. And in near term, again, the flying for the international market will also increase in coming period, which can act positive for the company. So overall direction wise looks positive, and this news may not have any negative impact. On the other hand, can be considered as bit positive. Anything else anyone would like to say?
No, sir.
Okay, fine. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.